Things are getting interesting in the interest rate world, and we're going to tell you all about it in this month's February mortgage rate update. The definitive guide on how to manage your credit, product, penalty, price, in that order. It's never been more important to get your mortgage right. All right, so welcome back. Lots of interesting things happening in the interest rate world. Obviously, we expected on January 26th for interest rates to go up in both the US and Canada. Obviously, both the Federal Reserve in the US and the Bank of Canada in Canada decided that they weren't going to increase interest rates, honoring their commitment to be transparent in what they were going to do. However, they did make it clear that interest rates would go up in March of 2022. And we're going to talk about where interest rates have gone up to and where they're at as of today. Keep in mind that this market is really fluid and interest rates are really fluid right now. So by the time this video gets published, certain banks may have already increased their interest rates or lowered their interest rates. So if you're watching this video, keep in mind that the rates in this video are a pretty good indication, but not necessarily exactly the rates that are out there at the moment in which you watch it. But before we get into it and we talk about all the rates, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers, where when we hit 25,000 subscribers, we're going to give away $5,000 to one lucky winner to do with whatever they like. Maybe they pay down their mortgage, maybe they use it for their down payment, or maybe they just go and blow it on whatever they want to blow it on. But in order to win, in order to get that money, you have to be subscribed. And you also have to watch for the exact way in which to win that money on future videos in order to actually win the money. So go ahead, click that subscribe button. It's free, it's easy, it's definitely worth it. And ultimately, I sincerely hope you, yes, you, the person who's watching this, I hope that you end up winning, because I really want to see you have that $5,000. But of course, there can only be one of you, and there's a whole bunch of you that are watching. So I'm rooting for all of you. I'll let you know when we get to 25,000 subscribers who the winner is. So let's discuss interest rates as of February 2022. I'm going to start this whole thing with a disclosure. You know, what I've noticed is that there's a whole bunch of people out there who are watching these videos and they're taking the information from it and they're going to their bank or they're going to their broker, and that's fine. I just want to tell you right up front, if you go directly to your bank and you get a 5-year fixed rate hold and then you subsequently get a 5-year fixed rate, I can't help you. I can't help you when you have a massive penalty that you didn't expect to have. I can't help you when something goes wrong in the process. And if you go to another broker who's maybe selling discount mortgages and doesn't disclose all of the things that are in those mortgages that could cost you $5,000, $10,000, $15,000 down the road, I can't help you there either. So here's my ask of you. If you're watching this video and you're either a first-time home buyer or you're a move-up buyer, if you are purchasing a property to live in and you're in BC, Alberta, Saskatchewan, or Ontario, please give Mortgage 360 the opportunity to do the mortgage for you and make sure that it is done right. Because we're seeing a lot of people coming to us just after getting their mortgage or getting all the way into the process and having nowhere to turn, asking for advice. And by the time we get to that point, it's already too late. I can't protect you from the banks. I can't protect you from discount mortgages unless you're coming directly to us. And I certainly can't give you advice if you call me or email me and ask for advice without you being a client and without you being somebody who's signed a written service agreement with us, because it's both unethical and illegal for us to provide advice to people who haven't signed a written service agreement with us. So that is my caveat to this whole thing. If you are in this situation where you've got a bank, you've got a broker, we have a course called Secrets to Getting the Lowest Interest Rate. It's $97. It'll save you at least $1,000 to $5,000, depending on how big your mortgage is, just in the information that's in that course. It'll also save you from getting into landmines and surprises that are going to come back to haunt you somewhere down the road, just by having the knowledge of what to look out for. You hear in the intro of this video, I talk about product, penalty, price in that order. The worst thing you can do is look at rate as your primary determining factor of the mortgage you're going to get. You need to look at the product first, make sure it's the right one for you. Then you can look at the penalty, which is the thing that most people don't factor into the cost of the mortgage, but almost everybody at some point ends up eating. And then look at the price and the interest rate once you've determined that the penalty and the product are the right products for you. So all of that being said, you can go to ratesecrets.ca to get the Secrets to Getting the Lowest Interest Rate course. If you do decide to have us do your mortgage, we will give you 10 times your money back in a credit. So you can go ahead and use that to get basically $1,000 off your mortgage or your moving fees or so on and so forth. And ultimately, you know, we put that out there because we want to make sure everybody has the information they need to get the exact right mortgage, to know how to negotiate with the bank, know how to negotiate with the broker, and also know how to make sure that you aren't getting surprised by something, thinking that you got a really good interest rate, and ultimately you end up getting screwed because you didn't know what you were getting into, or you didn't know what they removed from the product or put into the product in order to give you that super low, ultra low interest rate. So again, ratesecrets.ca if you want to take that course. And otherwise, I sincerely hope that you'll allow us to join you on that journey and actually help you get the mortgage. So moving into the interest rates here, let's talk about what's going on in the interest rate market. We've added cute, cool little triangles to these slides. First and foremost, 5-year fixed, full featured mortgages, insured or greater than 35% down. These are the mortgages that have the least risk for a lender. They are pricing the 5-year full featured mortgage right now at about 2.79. This is up from about 2 or 3 days ago. Reason why is because there's that continued expectation of the Bank of Canada and the Federal Reserve increasing interest rates, and subsequently 5-year fixed rates are going up. That being said, most of the increases that are expected by the Bank of Canada and the Federal Reserve have already been factored into 5-year fixed rates, so don't expect these to go up substantially more, but there's going to be a lot of fluctuations up and down in these in the next couple of months as we start to see what's happening with interest rate increases and how it's affecting the economy. Now, second, we go into the 5-year full featured fixed between 20 and 35% down. These are the mortgages that carry a little bit more risk because they aren't at that 35% down number and they don't have mortgage insurance on them. So in the past, it used to be if you put 20% down, you got a really good deal. Now 20%, because it doesn't have insurance on it, is the most risky mortgage for a bank. So these are priced between 2.79 and 2.94. Obviously, the more you put down, the lower that rate. So if you're putting 30% down, you're going to be in that 2.79 range. If you're putting just 20% down, you're going to be at 2.94. By the way, my big caveat is if you're going to get a 5-year fixed mortgage, don't get it through a big bank. The reason you don't want it through a big bank is because the penalty calculations are not in your favor. It's the one thing that you're going to spend a lot more money on with a big bank. Most of the monoline lenders have penalty calculations that are going to be about 1/5 to 1/3 what a big bank penalty would be. And this is really, really, really important because even though we expect interest rates to go up, if they don't go up substantially, you could find yourself incurring an interest rate differential if you need to pay out a mortgage. And obviously, penalties mean lack of flexibility. It means not being able to go and get a lower interest rate if rates do go down. It means not having the flexibility to negotiate for lower rates when you want to go and buy another property, and so on and so forth. So you have to be very, very wary about penalty. Penalty is the thing that gives the bank the leverage down the road. It's why it's probably the single most important part of getting a mortgage and understanding how that penalty is going to be calculated. If you're getting a variable from a big bank, fine, but avoid those 5-year fixes. Moving into variable rates, 5-year full featured insured greater than 35% down, we're looking at about 1.35%. This has not changed from last month, nor has the 20 to 35% down payment rates, which are 1.35 to 1.45%. These are the mortgages that most of our clients are choosing, given how much lower the interest rate is than a 5-year fix, knowing that they've got 5, 6, 7 interest rate hikes before they get to where the 5-year fixed rates are right now. So this is a really good option for most people. And moving into discount interest rates. Now, again, these are the ones you're going to find if you Google lowest interest rates Canada. You're going to find websites that have super low interest rates. Keep in mind that it is like anything else in life. You absolutely 100% get what you pay for. If you're paying the lowest price, you're not getting the best mortgage. If you're paying the lowest price, you're not getting the best features. It's like walking into a car dealership and seeing the baseline Ford Explorer priced at $35,000 and the fully equipped platinum level Ford Explorer being priced at $70,000 and going, well, they must be the same thing, so I'm just going to buy the cheap one. And obviously you give up a whole bunch of really nice features and things that ultimately are going to save you money, like resale value down the road, by choosing the lower cost one. So you got to understand that discount mortgages come with things stripped out of them. They come with things that aren't always in your best interest, things like bona fide sale clauses, which basically means you can't leave the lender unless you sell the property, which means you can't refinance, go to a different lender. You can't switch to a different lender for a lower interest rate. You're pretty much stuck. And the big challenge here is if you've got a variable rate mortgage with a bona fide sale clause, you could end up in a situation where you are basically saying, hey, I want to lock in my rate. And they're saying, well, it's going to cost you because you've got this bona fide sale clause, you can't leave. And we now get to dictate the terms. By the way, big banks can do that with their penalties. They can basically say, if you want to leave, if you want to do something, it's going to cost you because they have substantially high penalties. So the 5-year fixed discounted rate is priced right now at 2.54. That is again up from last month. 2.54 to 2.69 between 20 and 35% down payment. Again, the lower rate is for the larger down payments, getting up around that 30% down payment range. And then getting into 5-year discounted variable rates, this is where you can save a lot of money, but keep in mind, The lock-in process could be trouble for you if you can't leave the lender somewhere down the road. You may have to pay a higher interest rate. So if you have any sort of idea that you might lock into a 5-year fix, you probably don't want one of these discounted rates. But if you're, hey, ride or die variable rate, and you're going to hold on to it for the next 5 years, this might be a good option for you. 5-year discounted variable is at 1.05% for insured or greater than 35% down payment. And then 1.05 to 1.15 for a 5-year discounted variable at 20 to 35% down payment. So again, really great options. You know, I'm a little bit hesitant from the perspective of saying, go out, get that discounted mortgage, because again, you lose your flexibility, you lose your options. If you need to refinance, especially if you're putting more than 20% down, it can become problematic. And there's a whole bunch of reasons for that. If you choose to come to Mortgage 360 for your mortgage, we can explain them all. Or if you want to go and take that Secrets to Getting the Lowest Interest Rate course, we explain them all in there. So that is your February mortgage rate update. I know I blasted through that real quick this time. I hope you found this information useful. If you did, do me that favor, hit that subscribe button, hit that notification bell. Please hit that like button so more people like you can see this video. Don't forget about that race to 25,000 subscribers, and we'll see you on the very next one. Cheers.